Hi, everybody. This is Peter Schiff, and it is Wednesday, November 17th, 2010. Well, first of all, it's been about a week since I did my last video blog, and I know we've seen rather powerful counter-trend movements in the markets during the past week. We've had a rally in the dollar. Dollar index is now just above 79. We've had sell-offs in commodities, gold, silver, oil. The entire CRB has sold off. Global stock markets here in the U.S. and around the world have been weak. Bonds have also been weak, with the exception of yesterday. We had a rally in the bond market, but over the past week, we've seen a pretty substantial backup in interest rates, particularly on the long end of the curve, the 10s through 30s. The question is, what's going on? Is this a change of trend? I don't think so. Bull markets, they always take the stairs up and the elevator down. There is always two-way risk. It can't be that easy to make money in these markets. If you have a trend, you can't just simply leverage up and ride it. There is going to be a lot of volatility to shake out the speculators, the weaker hands. That's what you're seeing, in my opinion, in the markets right now. I think the catalyst for the dollar strength has been the fact that so many traders are now having their attention diverted to the sideshow going on in Europe rather than the main event here in the United States. You have, again, problems surfacing in Ireland, also renewed worries about Greece, now Portugal. This, of course, is causing people to worry about the European problems, and they're temporarily not paying attention to America's problems, which I believe are far greater. And so this has put a bid in the dollar, and it's maybe acted as the catalyst for some of these counter-trend moves. Also, it's not just Europe. Look what's going on in China. The Chinese government is making a lot of noise now about trying to fight inflation in China. Now, inflation is America's greatest export to China. China gets its inflation from us. We print money. We use it to buy Chinese products. And now to keep the Chinese currency low, the Chinese government prints money and buys up our dollars to maintain the currency peg. And now we get inflation in China. And what the Chinese government is talking about is attacking the symptoms of inflation and not the cause. They're talking about price controls, something that we tried and failed under Richard Nixon in the 1970s. The reason that price controls don't work is because inflation is still being created. All you're trying to do is hide the effects by not allowing prices to rise. But what happens is you end up with shortages, you end up with black markets, and in fact, price controls will do more damage to the Chinese economy than the inflation that the controls are meant to try to combat. Also, I'm hearing that the Chinese want to do something about hoarding. Apparently, people in China are smartening up. They're starting to stockpile consumer goods, commodities, food, because they know the price is going to go up. Now, how is it that the Chinese government is going to stop this? Are they going to place limits on products that the Chinese consumer is able to buy on one shopping trip? I mean, this involves a much heavier hand of the state. Hopefully the Chinese will recognize the futility of this and realize that the source of the inflation problems is their undervalued currency, and if they simply allowed the Chinese RMB to rise, they could nip the inflation problem in the bud, and they would have an immediate benefit to their economy. It would be an immediate detriment to the U.S. economy because instead of exporting our inflation to China, the inflation would stay in America. We'd have to deal with it here instead of pushing off the consequences on the Chinese. Now, talking about inflation, of course, we got the CPI that came out today, and everybody is talking about how there's no inflation, that year over year prices are only up by 1.2%. Well, first of all, the CPI is highly distorted because of hedonics and substitutions and how much of owner's equivalent rent is in there. But still, even after all that distortion, prices are still higher than they were a year ago, which means things cost more, which means if you're unemployed, you have less income, that bites. It would be better if prices were falling. Now, can you imagine, with all of the productivity in China, imagine how much prices would be falling if it wasn't for all the inflation that they were creating. The Chinese people would benefit from lower consumer prices. Now, one thing in our CPI that I heard a lot today, is about the core. Apparently, the year-over-year core is only up 0.6%, which is the lowest since 1957. Now, the fact that the media even talks about year-over-year core is a propaganda victory for the U.S. government. Because if you think about the core CPI, which is prices X food and energy, The reason you take food and energy out is because they're volatile. So on a monthly basis, you don't want to make any major decisions based on one volatile month. So they take out food and energy. But of course, when you're looking at year-over-year numbers, that smooths out the volatility automatically. So if food prices are higher, if energy prices are higher today than they were a year ago, it's got nothing to do with volatility. It's inflation. It's a trend. To try to dismiss it is just pure propaganda. Talking about propaganda, I read an op-ed piece penned by Warren Buffett that was in the New York Times. Also, I read, unrelated, or maybe it is related, that he's about to be given the Congressional Medal of Freedom, which is the highest civilian honor that we can bestow in this country. Now, Warren Buffett is going to win it. But anyway, in his very self-serving op-ed, he thanked the government, the Federal Reserve, for the bailouts, for TARP, for everything that was done to quote-unquote, save the economy. Now, there's no question, at least even Warren Buffett admits it in his letter, that if it wasn't for the bailouts, Berkshire Hathaway might have gone bankrupt as well. So it certainly makes sense that Warren Buffett is thanking the government for bailing him out. I'm sure there's a lot of people on Wall Street that should be writing thank you letters to the Federal Reserve for the bailouts and for all the bonuses that were resulted from those bailouts. But the American people have nothing to be thankful for, and certainly it's very disingenuous for Warren Buffett to imply in his op-ed that in addition to bailing out the billionaires on Wall Street and Warren Buffett, that somehow the American public was helped by the bailouts. They certainly were not. I mean, first of all, when you have a Warren Buffett congratulating the Fed on the success of the bailouts, it's very premature because we don't know how it's going to end. It's still early. Remember, the key is unwinding. It's the exit strategy. How does the Fed shrink its balance sheet? How does it get out of this box? I said there is no way out. I think it's like the Roach Motel. And I think if we try to exit, that the resulting collapse will be far worse than the one that Warren Buffett is congratulating the Fed for averting. And if we try to avoid that by not exiting at all and just inflating in perpetuity, then we have hyperinflation. And of course, that's much, much worse than the economic collapse that would have unfolded had the Fed not bailed out Warren Buffett and everybody else on Wall Street. And of course, also when Warren Buffett is congratulating the Federal Reserve, for putting out the fire, where is there's nothing about the fact that they lit the fire. They set the fire in the first place. And they didn't actually put it out. They just temporarily doused its flames at the cost of a much bigger inferno, in several years. Now, one thing that Buffett did mention in his op-ed piece, he said that there were some people who saw this coming, but that most people didn't, and that those that saw it coming, they were drowned out because everybody was caught up in this mania, and that the people who were criticizing the Federal Reserve are the same people who didn't see the crisis coming. That's not true. The reality is people like me who were warning, right, whose warnings were ignored, as Warren Buffett pointed out, we are the ones who are the most vocal critics of the current Fed policy. So maybe Warren Buffett, who admits himself did not see this crisis coming, maybe he should defer judgment to those of us who did see it coming, who did warn about the consequences, and see what we're saying now. Because after all, Warren Buffett could have written the same op-ed in 2002, 2003, thanking the Fed for saving us from the recession of 2001 after the stock market bubble burst. Of course, the cure was worse than the disease, because the cure for the stock market bubble was, in fact, the real estate bubble. And when it burst, we finally got to see the consequences of what the Fed did. And I can assure you that the consequences of this bailout will be even worse. Speaking about the bailouts, apparently GM is getting priced today for a brand new IPO, which is going to be, I think, the largest IPO in U.S. history. I've just got one word of advice: stay away from General Motors. I have no idea. Short run, it might bounce. Who knows? Long term, several years from now, the stock, I think, is going a lot lower. I think it might go bankrupt again. I think the only thing that might save it from bankruptcy is massive inflation, and so nobody goes bankrupt. But in real terms, I think GM shares will lose a lot of value. We didn't have a real restructuring like that we would have had under a legitimate bankruptcy. I think there's still a lot of problems with GM that are being hidden. If anything, this dog and pony show is probably the biggest stock fraud in U.S. history. Anyway, take care for now. I'll be back again soon.